Good morning, everybody, and welcome to day 12 of my Forex trading journey. I hope each and every one of you are having an amazing day so far. And today we are starting right at the top because as I've gone ahead and I've started this recording, I already have two alerts on my pairs of choice. We've got gold and silver with the buy arrow both showing up on both pairs. So we've got two opportunities to go ahead and take as these candles wind down here to begin the trading day. Once again, I hope each and every one of you are having an amazing day so far. As we could see, we had talked about the equity, how that would affect everything. It looks like it did. So our equity right now is at 94, and that's perfectly all right. As long as we are still here, as long as we are still in the game, then all we need to do is focus on today, and that's about it. Like I said, I hope each and every one of you are having an amazing day so far. And, as we move forward, right, as we go ahead and as we move forward on this journey together, we notice that the mountain, right? So the drawdown mountain, as I would like to call it, which really in actuality is just the balance being higher than our equity. It can get a little steeper as we move forward. Of course, that is something that, I have my eye on, since we've started this journey back all the way on day one, and we took some of those first trades as part of our hedging strategy back on day 3 and day 4. There is that particular, uh, I wouldn't say worry, but I would say that I do understand there is that metric right there. And what we all need to realize is this is part of our plan right here. And as long as we understand that this is part of our plan, then we're going to be able to make sure that we move forward right here in the right direction. So I'm very confident about what we have in place for right now. So very, very, very excited to get things going here on our trading journey. And it's all just a matter of taking that first trade on the day and then being able to go ahead and move forward from there. So with that being said, we've got about a minute before that candle closes right there. And while we wait for this candle to close, I know that we had talked briefly before we had to end the recording on day 11. We talked about the key principles that could help guide every investment decision that we make. And one of those, or what we had talked about as far as the most successful people in any field, right? What were their chosen qualities? What were their qualities that allowed them to move forward in the right direction with whatever venture they were wanting to go ahead and pursue? And so the most successful people in any field aren't just lucky. We said that they had a different set of beliefs, they had a different strategy, and they do things differently than everyone else. So as we go ahead and as we take a buy right there, a buy right there, and give me a second right here, buy right there, and a buy right there. Okay, so I got that done. Boom. Okay. So as far as what those different sets of beliefs are for us, for forex trading. Now we have to understand that while, and I had mentioned it, that in the stock market it takes a lot of capital in order to make a lot of capital, right? And that would be relatively true if we were just looking at stocks and not leveraging our money as the Forex system allows us to. And so, what I would say to those different sets of beliefs are, well, yes, that's all true that, you may need a lot of capital to make things move in the stock market. Here in the Forex market, what we're practicing, what we believe in, is the fact that we can go ahead and we can get this done just by being able to do this with $100, right? Being able to compound an account, starting from a base point of $100 and being able to flip it to whatever we see fit. Now, we also have to understand that by doing this, right, that by undertaking this particular journey, that there are going to be some bumps along the way, some bruises. Yeah, as we can see, we've had some bruises, going back to days 3, day 4, even day 9 and day 10. Day 11 was a breakthrough day, or a break-even day for us as far as our equity is concerned. However, days 3, 4, days 9, and days 10 were the days that we took a little bit of a bump on the road, right? We took a little bit of a setback. And we have to understand that even as those days, we could consider them negative days if we want to, but I'll also look at the mindset of, hey, without those days, we wouldn't be able to still move forward because we wouldn't have been able to practice the strategy that we've had, knowing what we do if we encounter such particular days. It allows us to make sure that we're still here, that we're still in this particular juncture right here, and we're still able to trade. And trust me, as a teacher, right? As the student energy is like, ooh, of course, hey, it looks like I had to learn a little bit of a lesson in the market, and the master is going like, ooh, I'm disappointed in my I'm sorry, disappointed is the right word in terms of what I believe in, but as someone who, if I put, a trader who wants to do absolutely perfect in the market, if I put myself in their shoes, they'd be like, ooh, days 3, 4, 9, 10, those are losses right there. I don't know if I can handle it. And maybe you can, right? Maybe that is something that we have to work on internally for right now, especially if we're so new. And again, that's always why I'm so keen on people making sure that they practice their trading on a demo account. And so as far as just being able to keep on going, that is something that we're going to really put our beliefs into practice here. Because as far as I am concerned, yes, this is it's a very tough road when you first start out. And you go from, again, I just go back to where we're at the journey, right? So our equity went from here. We took a little bit of a dive right here, but we're still maintaining, we're still holding on, right? And as someone who's just looking at these videos, just like, ooh, do I have the stomach to do this? Or am I looking at the teacher and I'm saying, oh, there could have been some times where you could have exited those trades. And that is a fair and valid point. However, if your beliefs tell you that what you're doing is right, right? So if you have a different set of beliefs that tell you what you are doing is right based on what you've learned, then that will help you become successful in the craft that you do. And of course, if there are things, of course, with us not being in a state of perfectionism, if there are still things that we need to learn, again, applying the student master dynamic, then we will definitely have to go ahead and do that. But at least for right now, we're going to move forward in how we see fit. Oh, by the way, I need to take so this candle close right here. I got to go take another bite because the arrow moved. You guys definitely saw that. Let me get my pen out here. We definitely saw that this came here. Then the arrow kind of came over here. So, that's what we call our cost average trading when it comes to gopher right now. So let's get that out of the way. And then just checking on silver right here, we can see that silver is on its way. So we just have one open position right there. So talking about coming back to the most successful people in any field. Now, they also have a different strategy as well. Now, hedging, as far as that's concerned, hedging is not, that's really what I like to call focal point, our base point for the strategy that we're using with the testing that we're doing. Well, not testing, the trading that we're doing. That's the key component right there. Yet I know that there are plenty of hedge traders that are out there. I've seen a lot of these amazing programs that are out there, and they're absolutely awesome, absolutely great in what they do, especially if you're confident enough to and vulnerable enough, and it will expose yourself to your expertise in the market, testing your own strategy, and then being able to place that in the marketplace for everyone to see. That takes a lot of courage, and I would certainly never doubt any of these traders that are putting on their own courses. I wish I envision them nothing but the best, because I do believe they have something that they can offer to the world to make all of us grow. I know for me, my strategy is going to apply to my selected target, my selected people that want to watch me. And so I'm also confident in sharing the strategy that I have to give to the world and to whoever watches these videos. And they do things differently than everyone else. Now, the way that I trade, I guarantee you, is different from how a lot of other people trade. I can't tell if someone will trade the exact same as me. In fact, I'm not sure if anyone has traded the same exact way that I do. I could be the crazy guy. Again, it's all people will think. And again, I have to get the perspective of, I understand how come they would think this way, but a lot of people will think that I'm crazy doing what I'm doing right now. And again, fair. That's a very fair thing to say. However, if I don't try this out, right? And I was thinking about this as I was watching an interview with Tony Robbins, Dean Graziosi. I bring these two gentlemen up because they're such a huge cornerstone, they had such a huge impact in my personal development over this past year. I bring them up because they had an interview with Matthew McConaughey. Matthew McConaughey, come on, everyone knows him. And but Matthew McConaughey, he has a book out there, one that I'm looking to read at some point in my life, and I know that will be a topic on a certain episode on the show. But anyway, what he was talking about throughout his book Greenlight, and even what he was saying was, if I hate the power of not knowing. And I felt that was so powerful because, yeah, if, full well, there is a chance, we're not putting it out there, right? We're not putting that out to the universe, but there is a chance that this could blow up on our faces. However, if we don't know that this could blow up in our faces, then not knowing makes it worse. Not knowing will make me sick inside, because this, in that perspective, I would say, ooh, this could have worked out. This could have been highly successful. This could have been eye-opening to a lot of traders that need help, or just a lot of people that need a better way than what we're doing. And we're not obviously attacking anybody, but we all know that we're going through a struggle right now, that we only have maybe $100 each and every now and again. And maybe instead of going through that same cycle of just having $100 every now and then, let's put that $100 to use, learn a skill that is super powerful in a market that is $6.6 trillion a day, and be able to capitalize on said skill. And so coming back to not knowing, or coming back to not giving this a shot, it's one of the reasons I really wanted to start this channel, is to let it be known that I'm doing this. It may sound crazy. It may sound chaotic. However, the power of not knowing what this could do is worse than if I never tried at all. Just want you to think about that. The power of not knowing that this strategy can work is worse than if it doesn't work at all. Now, there are four, we talked about one of these core four principles in the past, right? But there are four principles that nearly all great investors use to guide them into investment decisions. And these principles are what's called the core four. Now, we talked about the core four before, but now we really get to go ahead and we get to break down exactly what this means. And by the way, everybody, this is not, my core four principles. Again, I am reading based off the book Unshakable by Tony Robbins. And if you've not gotten a copy of Unshakable by Tony Robbins, then I'm going to urge you again. I'm just going to push you to take some action and go get Unshakable by Tony Robbins. Now, the core four, these four patterns can powerfully influence your ability to achieve financial freedom. Now, here's another thing that's so poignant, right? So powerful. This I want everyone to write down. It's not enough to know a principle. You have to practice it. Execution is everything. All right. Take 5 seconds to write that down. 1, 2, 3, 4, 5. And by the way, I hope everyone saw that candle right there. Kind of move to the next guy right here. So that will be another buy trade right there, as long as that candle closes without the arrow disappearing. But write that down. Now, another thing I want to point out is just noise, information, and stuff that's useful. Because I've mentioned the noise, I've mentioned all this information, I've mentioned, what to stick to, what to focus on. But I want to, before we talk about the core four, I really want everyone to get this dichotomy down. So let me get my circle tool right here. All right. Boom. Boom. And got about 20 seconds before this candle closes. And boom. Okay. So I want everyone to, this circle right here, this outer circle, label this as noise. Now, what do I mean by noise? First, hold on. Okay, so I'm at 3 open buy trades at this particular moment. So what do I mean by the noise? Now, noise is stuff like, I don't know, CNBC, stuff like Bloomberg, stuff like Fox Business, stuff like articles telling us the world's going to fall apart. Stuff like, oh, we're about to have the worst depression since 1930. And I laugh because I was so privy to it, going into the market. I'm just like, oh, I love absorbing all this news. Like, oh, look at this, look at this, look at this, and it's just like, I laugh because it's entertaining to read all that stuff, but I realized how much harm it could actually do to you if you're actually looking to invest and, you get all this information fed to you. It's like, well, what's the point of investing if everyone's predicting that the whole world's going to collapse? Right? It's like, hey. So, noise. Now, noise is just there's a simple way to deal with noise. You just don't pay attention to it, right? Like, we don't necessarily need to concern ourselves, nor do we need to concentrate on the fact that, well, noise is there. We can let noise be noise. We can let people talk. We can let news be the news. We can let all that go and just stick to, okay, what do we know? As what do we know are our principles, or what do we know in the market that can help us out here? And as long as we're able to understand what helps us, well, get away from all the noise, to chatter and everything, that can help us become better traders over the long run, because our brains aren't being distracted by all the little chatters that are going on out in the world. And so I'm not going to say not to watch those channels. I'm not going to say to not dig into the news like that. But for me personally, I don't look at all that, because I know that by looking at all that, it just scares me. That would scare me into not wanting to take part in this beautiful market that we have right here. So don't watch. So noise. Now, the next part right here is information. Now, that right there, information's important, right? I'll give everybody a second here if you want to label that inner circle right there, information. I'll give you a pause right there. 5, 4, 3, 2, 1. Information. Now, information, there's, again, a lot of amazing teachers that are out there in Forex trading, or even investing in general. And there's a lot of different strategies being taught. And I know that a lot of teachers are going to trade in a way that I necessarily don't trade, which is perfect. Again, everyone has their own method to their madness in the market. And I understand that they're trying to attract a certain crowd that may not be necessarily necessary for me. For example, I teach trading using 3 simple parameters. What we're looking at in terms of a trend, what we're looking at in terms of risk management, and what we're looking at in terms of when to enter a trade and when to exit a trade. Let me just see something right here. Okay. So let's come back. So was that platinum? No, that wasn't platinum. So coming back. So a lot of the trading, or a lot of the talk that's going on as we move forward throughout this journey, a lot of people are just going to trade differently than how I experience trading. And we could see that arrow turn into a buy, or it did for a second. So we know we're carrying ourselves in the right direction here. But let's come back now. Let's come back. So what we're trying to understand now, as we delve and we move forward, is a lot of traders are different. And if you're watching this, you're either A, in my heart, right? Right. This is right now in my heart. Actually, I would fit you into three categories. Now, you're all beautiful people in these three categories, amazing individuals. And I am not, I don't value one category over the other, but it's important for me to realize who is watching these videos because, in my eyes, these are the people that I want to attract. You're either a friend, a family member, a loved one. And for that, I say hello. I hope all is well. Love you guys. Number two, you're someone who, and again, we're never, ever, ever judging on this show. This is a judgment-free show, judgment-free zone. I just want to make sure everyone remembers that, okay? Now, you're either, because I've been in that situation before, you're tired of going paycheck to paycheck. You're tired of the financial struggle. You're wanting to see if there is a different way to do this, a simpler way to do this, an easier way to breathe, right? We just want to breathe. And you found my channel as a way to, this is a potential way that I can breathe. And what is this Forex marketing? Forex market? What? $6.6 trillion a day? What? You could trade just like that? Whoa. You could do all this? And you got so many questions, and we're gonna do our best to answer all the questions I believe are in your head right now. But I know that I know that I might miss a few questions. And so if you have one, feel free to always give me a comment on my YouTube videos. Feel free to ask me on Facebook. My Facebook profile is Jordan Rosario. And the guy with the Bronco coat on. You'll see me. So you can either come to my Facebook or you can come over to my Instagram. And that's Jordan Rosario 777. I'll give me a second here. Give everybody just a moment to take a pause and just write that down. 5, 4, 3, 2, 1. Here we go again. 5, 4, 3, 2, 1. Okay. So with that being said, I just want to come back to the circle right here. So we've got noise, information. Now we alluded to the people who are coming onto my show. So again, family, friends, loved ones. We've also got the people that are just looking to make a way, looking to find a new way, looking for something new, looking for some way to invest without putting a lot of upfront cost into the fray. And then there is another particular avenue. Now, there might be Forex traders that are listening in that I break down to 1 to 2 categories. They're either looking at my stuff and reviewing it and saying, how could I bring this into my program? Now, again, I'm not wanting to be the arrogant guy and saying, oh, I've got the best secret stuff in the world, right? Like, I'm not trying to, I've got that confident mindset, right? And confidence is important if you're going to do something like this. But I also don't want to come off as arrogant and saying I'm the best, right? Because again, we've got a lot of beautiful, amazing teachers that are out there. But there could be something that I'm doing that's like, oh, maybe I should use that when I'm teaching. Or number 2, people are struggling out Forex trading either on their own or the program that they're using. Again, we're not naming any programs or naming any names. That's not the point. We're a judgment-free zone. And they're looking for something else. Maybe I've got a insight, a tip, a tool, a concept that could help them. And so whatever that may be, what I'm concentrating on, so we've got noise and information, but what I'm concentrating on is my own dot and my own teachings that are useful in my perspective. So we've got, so I want to bring first. Oh, that's a lot. That's a lot. Okay. All right, ready? 5, 4, 3, 2, 1. Okay. So let's come back here. Now, as far as just breaking down this whole circle, right? So we got the noise, which is, just everything that's going on, even the stuff that tells us the world's going to end. We've got the information. So now we've narrowed the concept down to, okay, we're teaching investing through Forex trading. There are plenty of other Forex traders that are out there that have their own absolutely amazing programs and absolutely amazing information. And then there's where I come in, which is the information I'm using in my own style of Forex trading to get to the people that I deem and that I consider to be useful. And so if you're here, you're basically belonging to my own dot. You're basically belonging to, I want to take in what I am teaching that is useful for me. So whether that's opening your mind to just the concept of Forex trading, or whether you already know what Forex trading is and you want to grab some of this information to use either on your own, or if you want to keep following along and seeing how this journey goes, that's where you come in. That's where the doc comes in. And so it's important to understand all this information, because I want everyone to see, we've talked a lot about where you're coming in into the perspective, but I also want everyone to know that I am not ignorant to the fact that there are a lot of teachers that are out there, but at the same time, I know that I could bring something different to the table. I know that I do things differently than most Forex trader teachers, even traders. And that's perfectly okay with me. That's perfectly okay that I consider myself one of the, to put an analogy into perspective, I'm okay with considering myself one of the black sheep in Forex trading. Now, whether that's gets thrown in my face or whatnot, that's something that I will have to decide on for later. Right now, I'm just concentrating on what I need to do in order to be the best Forex teacher that I could be. So let's get rid of all that. Okay. Now, the best investors understand that what we're about to talk about, these core 4 principles right here, we haven't gone away from them. The best investors understand that these principles, sorry, not three, these principles must be obsessions. They're so important that you need to internalize them, live by them, and make them the foundation of everything you do as an investor. In short, the core 4 should be at the very heart of your investment playbook. So again, we're going to really just break this down right here, but really we are wanting to make sure that we adhere to these principles. And again, a lot of the core 4, while it talks about in the the stock market world, there are principles throughout these core 4 that can help us as far as protecting our own Forex trading investment right here. And we're going to break down specifically now some of the things that we need to talk about with the principles, because they can help us as we move forward to become better traders. Let me just take a look right here. Okay, we're still moving in that direction. Perfect. Okay. So the best investors are obsessed with avoiding losses. Now, just think about it. The best investors are obsessed with avoiding losses, and I guess that's more so a Captain Obvious quote right there, if we want to make it a Captain Obvious quote. But that is the truth. We are obsessed with avoiding losses. Now, why? Because we understand a simple but profound fact. The more money we lose, the harder it is to get back to where you started. Now, granted, right? We understand that losses are going to come in this market, and we're going to need to come back from a certain position. I mean, at one point we had about 130 something in equity. Now we're down to about 90, rather than the mid 90s, and that is hard as a investor to understand that. However, we've also followed our risk management principles to help protect us even under those particular circumstances, to where we can come back from that period and even tackle the mountain, which is our account balance, bit by bit and step by step. Rule number one, we never lose money. So we have our risk management principles to make sure we don't lose as much money as we can. And then rule number two, we never forget rule number one. I mean, if we can remember rule number one, then we're going to do absolutely just fine. We just got to make sure that each and every step that we take is a step in the right direction, whether that's a win or whether we are able to move and protect our capital. The most important thing, and this does go for me, the most important thing for me is that defense is 10 times more important than offense. You have to be very focused on protecting the downside at all times. And so if we know, right, we're in a buy trade, and so far it's going well. However, we saw some buy trades. We even saw some trades from days 9, 10, and even 3, 4, where they didn't necessarily go our way. We had our strategy, which was, the arrow was giving us the direction to buy. We take the buy. We allow the trade to play out. The buy did not get to our target of 30 pips and instead went down, and the arrow disappeared. And so because that arrow disappeared, we went ahead and we said to ourselves, okay, we put the kibosh, we put the cap on the trade, and we hedged to protect the equity that we've had. And we did this not only on days 3 and 4, but days 9 and 10, which we would consider losing equity days, because we know that protecting ourselves is much more important than being right all the time. And the most successful investors realize that none of us can consistently predict what the future holds. With that in mind, they always guard against the risk of unexpected events and the risk that they themselves can be wrong, regardless of how smart they are. Regardless of how smart we are, and I really don't want to get too egotistical right here, but I consider myself a pretty smart guy. I consider myself, and this goes to shaping my confidence in the markets and as a Forex trader, then I'm confident in knowing what I'm doing in terms of trading. However, what this does not give me the excuse to do, or what this does not give me an excuse to do, I should say, is to think that I am right all the time. I'm not right all the time. I'm going to get the trades wrong sometimes. I'm going to take a trade. It's going to go up against me. I'm like, oh, I was wrong. We're looking at an uptrend right now, or we were looking at an uptrend for a buy. Didn't go our way. It's like, oh, we're not in an uptrend anymore. We are starting towards a downtrend. Oh, we take a sell. Oh, we are not in a downtrend anymore. We are starting to get towards a uptrend, and we keep going and we keep going. And we go from there. But as long as we understand that our objective is to protect the risk against our egos from saying that we're right all the time, then we're going to do absolutely just fine in these markets. And that's our plan, right? So we've got, gold and we're silver, and we're going to plan on putting more pairs into the markets as we move forward. But the idea is that we're going to design a plan step by step, piece by piece. We're not going to get it all in one sitting, because again, we have to understand that I'm coming in this journey as if, and I know that I say, and I keep harboring the fact that I am a teacher, but I also have to put myself in the shoes of myself. When I was 25, I'm 27 right now. When I was 25 and I was learning this for the first day, I put myself in Jordan Rosario day one when I was 25. I sit him right here. I wish everyone, I don't have a webcam on, but you can see me. I'm just sitting. It's like I'm using my acting skills, however many acting skills I have, not the point. But I'm putting them right here and saying, okay, this is what I'm doing. So this is what I want you to do on day one. This is what I want you to do on day two. This is what I want you to do on day three. And we're doing that, we're doing this day by day, step by step, so that we can, when we get to the first month, when we get to the first year, when we get to the first decade, we already have things that we're going to do to make sure that we always keep moving forward in the right direction, and that we grow not just as investors, but as people. But that all will come in due time. Let's just focus. I it's a great vision, in my mind. But I also have to be like, okay, let's just focus on what we're doing here on day 12. And right now on day 12, we're doing this. We have an asset. We have multiple things that are coming and planning in place, but we do have to build the foundation one day at a time. Now we have to design in asset allocation that ensures we'll still be okay even when we're wrong. We talked about that. And it's simply just a matter of establishing the right mix of the different types of investments, diversifying them in such a way that you can reduce your risk and maximize your rewards. So think about it. We're trading on silver and gold. And for us, that's our way of diversifying a little bit, because we're not putting all of our stock into gold. We're not placing all of our stock into silver. What we're doing is we're just using both pieces as things that we can take for the future. We're not looking to jump the mountain. We're not looking to climb the whole mountain in one day. We're not looking to jump over 7-foot bars. We're looking around for 1-foot bars that we could step over. And what that means is, that simply means that we should invest in ways to help to protect us from nasty surprises, nasty hurdles. And that's what we're doing. And that's what we want to go ahead and do as teachers. Now, there is, I say that, all news I don't pay attention to. It's all noise. But there is one thing I'll do, is I'm going to go to, our handy dandy, what I like to call the Forex factory, the market news. We do have what's called an orange folder for USD right around 10 o'clock a.m. Eastern time, which is about 8 o'clock my time. And what that means, that orange folder, is it's not as bad as a red folder, right? It's not as, it's not going to, do anything too crazy now. However, it's just a thing that you want to pay attention to. There might be a little bit of moderate movement, and when we get into that position, okay, we just gotta be a little bit careful, right? We just gotta be a little cautious. Now, if everyone remembers what we had talked about our principles, right? So we talked about principle number one was slay the bear. We talked about that briefly last week. So that goes back to what we had talked about with diversifying when we eventually move forward to building different financial instruments that we can trade on. So now the second principle that I would like to talk about is asymmetric. If I could spell. Asymmetric risk and reward. Asymmetric risk and reward. So for that fancy jargon right there, what that means is it's a fancy way of saying that the reward should vastly outweigh the risks. In other words, the winning investors always seek to rise as little as possible to make as much as possible. I'm sorry, seek to risk. Sorry, let me back up here. In other words, these winning investors always seek to risk as little as possible to make as much as possible. That's the investor's equivalent nirvana. We think about it. Our way of not risking as much as possible is playing along with the arrows, understanding, okay, we follow or not follow, but we know what the direction of the arrow is. We understand that an arrow, remember, a buy arrow, let's put that down. A buy arrow that we see represents a buy opportunity because the market is telling us it is in an uptrend. In other words, the buy arrow is saying, hey, listen, prices are still rising. You need to get into this buy trade so that, prices can continue to rise and you can make money, right? That's the definition of a buy trade. We make money when prices rise. Now, at the same token, a sell arrow that we see represents a sell opportunity because the market is telling us it is in a downtrend. Again, prices are going down. You see a downtrend. Hey, you want to get into the sell trade because prices are going to continue to go down and you can still make money. Right? Let's do that again. We take the buy because there's an uptrend. In a buy trade, we make money when the prices go up. The market is signaling, hey, prices are going up. This arrow is saying, hey, we could take this buy trade right at this moment because prices are going to continue to go up. And so we want you to make money. 5, 4, 3, 2, 1. Now, vice versa, the sell. Hey, the market is in a downtrend right now. There's a sell opportunity. You should go ahead and take that sell opportunity because in a sell, you can make money when prices go down, and prices are still continuing to go down based on what we see. Now, that's great when we make money. Now, what happens on the reverse, right? What happens when we're not making money, when the market is actually going the other way? Well, the arrow disappears. We put the kibosh by making sure we're hedging our positions. And that's our best way to minimize as little risk as possible so that we can make as much as possible, keeping what we've made. When we see, hey, we're about 30 pips of profit, that's about it. Let's stop. Let's take that trade. And that's going to be our formula for creating and I'll coin this phrase, the Forex trading nirvana that we so want to generate for ourselves, right? I'm risking $1 in the exception. Let me grab that. Hold on, everybody. Hold on. Just a lot going on right there. So we just got we got ahead and we okay, everybody. Okay. Whew. Whoa. Okay, even I had to breathe right there. Wow. So we could tell we just had that big push right there, and we got ahead, and yes, some closed at 35, 30, some closed at 26, 20. The average is, so let's go back to our recap right here. So I mean, the average is for each of these trades, just by looking at what we did today. We made about 30 pips on average for each trade. So that's our goal. Boom, we're done. We're done. At least for right now. So let me finish up this point. We're risking $1 in the exception that I'll make 5. And 1 second here. Okay. Sorry, what was I doing? I'm just like, whoa, like, wow. Right. So I'm risking $1 in the exception that I'll make 5. And so what 5 to 1 does is allows you to have a hit rate of 20%. I can actually be a complete imbecile. I could be wrong 80% of the time and I'm still not going to lose. So that's one way of looking at risk management. For us, we understand, hey, the trades so far have been hitting for us most of the time. Sometimes we have a few losers sprinkled in here or there. But what we're doing now is we're understanding, okay, if we know that the arrows are good for us and everything else is terrible, then we understand, okay, we know when to enter, which is after the arrow closes. I'm sorry, when the candle closes, after the buy arrow appears, or after the sell arrow appears. If the arrow moves to the next candle, we cost average. And then if it continues to fall down, the arrow disappears, we stop the trade. We stop that. And that's our way of understanding that we don't have to be smart. We don't have to, because again, I'm not here to downgrade anybody, but what I'm really wanting to do, right, is understanding that we have, I throw a lot of terms out there, and I know we're going to need to do deeper dives on this as we go through the days, right? Because I do watch these videos I record, and I realize, I as a putting on my student cap, right, as I watch these videos, listening to myself talking in that master energy. Again, not to get too egotistical, but I just want to outline my perspective as I teach. I put on my student thinking cap and I'm like, I totally need to break this down a bit more. Or, I kind of talked about it, but I didn't go all the way. So now I need to bring this back up at some point. And so for me, just going back to our point right here, I do know that I talk a lot of complex terms, but I also want to illustrate and show that it really isn't as complicated as I'm trying to make it out to be. Like, I really want to make sure that what I'm doing is I'm keeping everything in a more simplistic form. All right, everybody. So we are back at it. We've been waiting for an opportunity to happen. So for the past couple of hours right here, really just an hour, we are back here at about 7 o'clock my time. And we do have a buy arrow for a silver, nothing on a gold as of yet, but we do have a opportunity here for silver, and you better believe that we are going to go ahead and we are going to take it. So we're just going to wait for that timer to dissipate here in 5, 4, 3, 2, and 1. All right, so we are in our silver buy trade. So we're going to go ahead and do just that. We're going to go ahead and, as always, We just let the trade play out. So with that being said, I just want to come back to a little bit what we were talking about. Now, we were talking before our little break right there. We were talking about our principle, our core principle too. So again, we've established that for investors, there are four core principles that we want to ensure that we are paying attention to. They are known as the core four principles, and I want to go ahead and I want to bring them back up again. So we had talked about our second principle, asymmetric. Can't you know, that's a tongue twister right there. Asymmetric risk and reward. And we were talking before about, we need to understand what our trading plan is, understanding how simple we want to make this work so that if we are wrong most of the time, now we have been wrong, and thankfully we haven't been wrong most of the time per se, mind you, but in the situation where we are indeed wrong, we just want to make sure that we're doing everything in our power to ensure that we are moving forward in the right direction. And so, with that being said, if we go ahead and we talk about specifically, or we know what our foolproof strategy is, then the idea within the strategy is to always look for limited downside and always look towards huge upside. That's the principle of any investor that's out there, whether you're looking the at this market, the $6.6 trillion a day market that the Forex market is, or you're looking at the stock market, you're looking at real estate, you're looking at crypto. Your goal is to always come in there understanding, okay, this is my downside. It's limited. It's a limited downside, but this is a downside nonetheless, right? It's a downside nonetheless. And we can go ahead and ensure that we move forward in that particular direction that we want to end up doing. And so, superficially, it does look like entrepreneurs. So, any traders that are out there, any investors out there, not just me, but those that are in the world of YouTube and even their own companies and whatnot. It sounds like a lot of us just have a huge tolerance for risk, right? And in some cases, that could be the case. But the idea, the concept that I really want to go ahead and throw out there is to always make sure that any investor, any entrepreneur understands that they're wanting to protect the downside. We're wanting to protect the risk that can happen towards our accounts. Our three core principles that we've been talking about as traders are risk management, entering and exiting trades, and trend. I feel that those are the three main principles that you want to understand because it's very important. Like, look at this trade, for example. The reason why we took this buy trade, we understand that as of right now, let me get my pen, we've got ourselves a uptrend, right? Like, if we can understand that we're still in a relative uptrend with this particular pair, then what we're going to go ahead and start to realize is, there's more of a probability. So we talked about probabilities on day 11, but there's going to be more of a probability that our trade is going to go in our favor because we know the direction that the market wants to take. Now, just as we talked about before, that no bear market lasts forever, no bull market lasts forever. So we understand that risk. And so we have that downside to, of course, think in the back of our heads, but we have the plan already for when that downside comes. We've been looking at this for, okay, what is our plan for when this happens within, going back to the past 12 days. And so what we do is we move forward from there. Now, everything is risk and reward, but what we got to understand what the risk is and also understand what the reward is. Now, most people saw much more risks, but math doesn't lie. and they simply didn't understand it. So and that's a lot right there. So let's just break that. Let's just kind of come back to what we're really talking about here. And I do have the buy signal for a silver, which is a very good sign if we're wanting to make sure we're moving in the right direction right there. But coming back, so if we can understand, so without even breaking down that quote, if we can understand what the risk is to trading, and for those that have been paying attention to my days, I am envisioning that a lot of you are seeing the risk that can happen in the market so far. Like I do envision a lot of you are really seeing what that risk picture looks like. And all we're doing is we're controlling that risk as much as we can to make sure that the objective of staying in the game to fight for the next day is achieved. And number two, we're also looking at, okay, what are the rewards that we're looking at? Now, for those past 4 trades that we took the 1 gold trade with the 2 cost average trades today. We took the 1 silver trade today, and we were just looking for 30 pips on in those situations as the reward. Now, as we talked about on day 11, that was a little bit different because at that point we were using 2 trades to buy trades that were in profit. We closed them from our hedging system to make them act as sell trades. And if you want a better illustration of that, I would recommend you watch day 11 if you haven't already. But we use day 11 to illustrate, okay, we take the open buy trade and we're going to go ahead and we would then we close those buy trades so it acts as a sell trade for us. And then, of course, we would allow the move to play out until we no longer needed to, which was the close of that particular trading day. And again, you could see that on day 11 for reference. But for this example right here, this buy, all we really care about right now is just making sure that we get our 30 pips in the market and then move on to the next opportunity. And we go ahead and having that confidence, we go ahead and we allow then the trade to play out. Now, how to reduce risk while maximizing returns. And so our reducing of our risk is very simple. In this, again, let's write that down, right? How to reduce risks while maximizing returns. And we've talked in a large part already of the bigger questions when it comes to reducing our risk. How do we go ahead and we end up doing that? So as far as that is concerned, we take a trade when the arrow comes up. We wait for that, of course, that trade the candle to close first before we take that arrow to reduce the arrow disappearing and us having to take an unnecessary trade. So that's step 1 of our reducing risk plan. We wait, when the arrow pops up, we wait for the candle to close to make sure it is actually an arrow that's worth taking. Then from there, we go into the trade, we let the trade play out. If the arrow moves to another candle, we treat that as a cost average until proven otherwise. And then the arrow disappears, we're done. That's it. We close everything. We essentially make sure our margin's at 0 and we wait for the next opportunity. And then we keep going from there. So that's in large part our strategy for how we go ahead and reduce the risk on our account while also maximizing the returns that we can gain from the account as well. All right, everybody. So we are back. And So you could see we did indeed take a loss on silver. We lost a silver trade, and that's all right. We understand, right? We know when we're going to win these trades, and we know when we are going to lose these trades. And so, as if we understand what our plan is, just going back, as long as we understand what our downside is, as we had talked about, and we're able to execute that plan, then we are going to go ahead and be all right. So I do want to break down some of the trades that I did, because I did kind of take these off screen. So I want to go back to, of course, we saw the first arrow right here that helped us with the first trade. Then I went ahead and, as you'll see on the screenshots right here, we went ahead and on the second trade, we went and we took a trade as soon as the then candles. So our first trade was right here. Then the arrow moved over to this candle right here, and we took a trade based on that. So again, we cost averaged right there. And then I went ahead and I took another trade when we had then this next arrow. So again, we took a trade right here. We took a trade right here. Then we took a trade right over here. So boom, 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 our three trades. And then ultimately the last candle, then after that candle, so that would have been this candle right here. Then we had this big drop down, and that's when we decided to get out of the trade as soon as the arrow disappeared, because then at that point, we could confirm that we're no longer in that uptrend. Instead, now we're starting to transition either into a flat trend or even a downtrend. So the market will tell us that, but I do want to explain how important this particular day is. Now, when I was closing these trades, I'll just let everybody know. So I was closing all our trades because, hey, I knew that at that point, okay, we're done. We did end up closing a gold trade by accident. So I had to place a buy trade right there, as you could see. But because I accidentally closed a buy trade when I shouldn't have on gold. So that's my mistake. But we could see how important this process is, right? We've won a trade, and that's fantastic. But now we've gone ahead and we've lost the next trade. And now we have to understand, okay, what can we take away from that, and how do we bounce back? And the obvious answer to all that is that we look for the next opportunity and we move forward. And we just have to understand that that's the best way as a trader to not get down on yourself. The buy trade happened, great, we made profit. The losing trade happened, okay, we did not make the profit that we wanted to. And now we can go ahead and we just move forward and we wait for the next opportunity. And so it's not a matter of, understanding, is our plan not working anymore? Our plan is. It's just been a very tough couple of days. It's been a very tough day 9, then day 10. Day 11, we broke even. And now day 12, we had an up and we had a down. And so now we have to understand, okay, how do we bounce back from that particular down and not lose confidence in ourselves? Because again, everything is risk and reward. And this correction, this bear market that silver and gold apparently want to go ahead and be in, that could be the greatest opportunity for us down the line, because different opportunities will always present themselves depending on the economic climate of market behavior, right? Let's write that down. Different opportunities will always present themselves depending on the economic climate of market behavior. So we had our opportunity to get into a buy trade before with gold and silver. And we were able to go ahead and cash in on that opportunity. We had another buy opportunity with silver that didn't go as well. And so we we capped the opportunity, or we protected our equity before it got into more drawdown than we needed to. And so now our account's okay. We're still in the fight. We still have our fuel now, and we're ready to go. We just got to look out for the next opportunity that comes our way. And whether it happens today, whether it happens tomorrow, whether it happens the next day, the market will tell us, but we're not going to rush. We still got platinum, by the way, that we get to trade that I have not taken a trade on. So again, with platinum, we have to wait before we put this onto the real account. We have to trade on demo to make sure that it all works out. But as for right now, we're not underconfident. We're not stressed. We're not nervous. In fact, let's go ahead and let's all take a deep breath now. Okay. We're still here in this market. We're still here fighting. And the next opportunity is indeed going to come our way. Hey there, everybody. I am back, and it looks like we're actually going to go ahead as soon as I go ahead and accept these terms and conditions right here. We are actually going to go ahead and take one of our first trades on platinum just to take a look at it, see what it does. So as we can see right here, it looks like it definitely has a little bit of a spread that we will need to watch out for in the following future, which is absolutely perfect. And of course, the reason why I'm doing this is because our arrow right here popped up, or the sell arrow would have popped up right over here. And I know that because we take a look at some of our resistances down below. We could see that there was a resistance right over here. So it went ahead and it went over to the arrow popped up right around this particular point. I waited for this candle to close. We took that sell trade, and now we're in a sell trade on our demo account for platinum. Now we see that the arrow did move to the other candle. So as soon as this candle closes, we're going to go ahead and cost average. And this is important, right? This is important to understand how platinum is going to work in terms of spread, in terms of how we want to trade it, because ultimately, by doing this, by understanding what platinum is going to do for us, this will allow us in turn to put together a good strategy for this currency and then ultimately have it move forward with what we're doing for the real account. So that's all good and well. We have no trades coming in yet for gold or silver, so we're still kind of waiting on that. So in the meantime, we'll play with this platinum and we'll go about it from there. So, I mean, that's the thing, right? It would have been very easy for me to, after those two that win and that loss, to be like, okay, let's hang up the hat. It's time to get out of here. But my emotions, to me, it's like, well, we have an opportunity. We don't want this opportunity to be wasted. And of course, we have our plan, we have our goal. And so why not go ahead and allow us to get into platinum and at least do that particular test first, right? Because ultimately, I do like to see platinum as a part of our rotation when trading. And so in order for me to understand what that is going to do for us, what the objective of getting into platinum would mean for us, I have to go ahead, I have to put the emotions, the experience of what happened with those two trades earlier today in the past, and I have to concentrate on the present and what we're going to do right here and right now. Because again, this is a market climate right now that is in a bearish trend. And so we want to go ahead and we would like to take advantage of specifically what that trend is going to mean for us in this term. And so with that being said, there is another core principle that we are going to talk about right here. And that particular core principle It's just being efficient with our account. And what I mean by efficient is, again, we're going to run into situations where we're going to start trading, right? And we already know what the costs are going to be. So let's break down what those costs are going to be for each trade we take. Cost for each trade that we take. So one is, of course, going to be the commission. Now, we talked about commissions briefly. I believe we covered that at some point in our first week of trading, if I'm not mistaken. But again, what commissions are to us is the broker is going to take and we're going to place a sell here. So just give me 1 second. Okay, we're in 2 sell trades now. We're just going to let that trade play out. But coming back to commissions, right? We understand that as far as what we are going to be looking for out in the market is the matter of the fact that we're going to go ahead and get into some of these trades where, for every, and I've seen this so far happen for both gold, silver, and now platinum, that at least for this broker, Hugo's Way, and there's multiple brokers that will cover, but for this broker in particular, there is a fixed commission that is taken out for Hugo's Way specifically, and that commission is for each 0.01 in lot size. And this is strictly for gold, silver, and platinum so far. They charge a 0.05 cents for each lot size traded, which in the grand scheme of things to us, that means they're going to charge half a pip for each trade that we take. And the reason we know that's half a pip is a 0.01 lot size equals 10 cents per pip. So we now know that with trading, that means they're going to take half a pip out of the equation for us. So if you want to go ahead and write that down, I'll let you guys do that in 5, 4, 3, 2, 1. Okay. And so then the next thing that we're going to need to look out for are the swap fees. And the swap fees are for each trade that we enter, or I'm sorry, for each trade that is open after the 5 p.m. Eastern Standard Time market transition to the next day, because 5 p.m. Eastern Standard Time for us under Universal Time is midnight the next day, there will be a small cost or a small fee that is added to the transaction cost. So again, if you hold the trade for multiple days, well, there's going to be multiple swap fees that are added to each trade. So that's where, we need to be careful and be efficient with the trades that we take. No, I go back to day 11 where, we, instead of placing even more sell trades when we had those arrows, if you remember those first 2 trades for the sells, we went ahead and we closed buy trades that were already in profit so that we didn't need to add any more additional trades to what we were already doing, so that we could save on those transaction costs. And then the third thing that we'll have to pay attention to is spread. Now, spread, this is the broker's way of also taking profits off of what you're trading, because of course brokers have to make money, and these are the 3 main ways that they go ahead and do that. So spread is also something that we'll pay attention to. And while gold wasn't bad, nor I would even say silver wasn't bad at all, we could certainly see that Platinum does have a bit more of a spread that was made more so than other particular or two other particular pairs. So we just got to be careful as we move forward. Understand that that is the spread and be able to adjust from there. And again, that's why we practice Platinum on the demo account first so that we understand how it works. Because if we can, we'd love to add it to our rotation for the real account. However, if we can't do the strategy that we're doing right now on this account, if we have to tweak it, then we know that we need to go ahead and we need to get that done. So, yeah, let me get that out of the way. Okay. So again, we have commissions, we have swap fees, and we have spreads that we're always going to be paying attention to as we take some of these particular trades. And we will, as the days move forward, and as we move forward throughout the journey together, we'll understand how these fees play a bigger role in terms of what we will do for our particular accounts. All right, everybody. So I just wanted to come in just after the market closed, just recap what happened here. So we look at our beginning equity of the day, 94. We're down to about 91. So today was a losing day, and that's perfectly okay. We have to understand when we win in this market, when we lose in this market, and let's take the positives. Today we won some trades. Today we lost some trades, but we didn't allow those losses to become gigantic to us. And I also want to go ahead and just recap what happened here. So we went ahead and we took our first trade right at about this line right here. So let me grab my pen right here. So this was our first sell trade. Then we went ahead and we took this next trade right here, then this trade right here, and then this trade right here. So we had about a total. Oh, and we also have to make sure we covered this candle as well. So we had a total of about 4 trades going on. And as you can tell, the spread is definitely gigantic. So again, that's going to help us in determining, okay, is this the right pair for us to trade right now? Or do we go ahead and we throw this on the back burner until much later? And that will be proven in a given amount of time. So with that being said, we will go ahead and we'll move forward as we look at these particular trades. This has been day 12 of our Forex trading journey together, my friends. And I wish you, each and every one of you, a beautiful, amazing rest of your day, and happy trading.